Well, good morning, everyone. Welcome to our Friday morning trading room. My charts, I need to do some cleanup over the weekend here on my computer. Things bogging down a little bit. So bear with me here a moment as I update my charts for the morning. It looks like it's a fairly brisk morning here to start the day, which, it can be typical for a Friday. Fridays are either dull because nobody's there, or they're very active as traders try to get their business done early so they can go home. And hey, what's wrong with that? All right, hold on, almost done. There we go, last chart. All right, so yesterday, I'm not going to scroll back through everything here, but we'll take a look here at the daily chart. You can see yesterday, another bullish day. We've had three relatively strong days here in the NASDAQ. Volume is tailing off a little bit. That is a little bit of a concern. Normally, if there were more buying participation here, we would kind of see the volume perhaps trying to build. So while the market does seem bullish, and you can see we've kind of broken out of this little descending formation, it's not entirely clear yet whether this is nothing more than just a big bear flag. Certainly the declining volume would suggest as much. But it's also possible that the market is going to develop into a much larger trading range and retest around the 7,700 zone and possibly come back down here to 6,600. Although personally, I think a move back to around 6,900 would entice some more of the buyers. There you go. You heard it here first. Let's see. We got a lot going on here. Out of the gate, quite a few bars. If you were fast enough, here was your first in sync signal of the day on the Eagle, and that certainly got down to its profit objective. Ah, that's what it is. Of course, Les says it's non-farm payroll today. That's always a report to watch out for. Yeah, I never thought of it that way. Mark says, regarding my earlier comment about traders wanting to get busy so they can get home, Mark says, I'm already home. What a bonus. How true. Okay, so we saw that quick move lower, another little quick move higher. At the moment, still fairly neutral on the day. You can see we got this little bit of a sideways drift going on. Looks like there was a nice trend here pre-market. Again, this would have, I think, been near the report time. All right, well, let's just give them a few minutes to sort things out. See if we get anything resembling a trend. That's always, I think that's the biggest to do as a trader. You know, when you're looking at your chart, you're trying to figure out, well, should I buy, should I sell? It's really difficult if you can't discern a trend. If you're stuck in what you think is a sideways trading range, okay, that's fine. Then you know you're either going to wait for the trading range to break out, or you're going to trade it as a trading range, which means you're going to look for sell signals near the top end of the trading range. You're going to look for buy signals near the bottom end. And these will usually come in the form of a counter trend signal, a number 2 signal. But there's nothing wrong with waiting a few minutes. All right, back into the hard edge here. We got a little bit of a red bar buy and a bounce, follow-up signal, actually with a second push opportunity to it. I don't know if I want to try anything just yet. What time is it? Oh, we're only 8 minutes in. Trade forecasters suggesting we are going to be in scalp mode here for most of the morning, and so far, it certainly does look that way. Getting a lot of back and forth. Take a look here at the Hawk scalper. Well, you'd have to be pretty quick, but these first micro macro cross signals seem to be working out pretty well. There's one right here. Here's another one right here, followed by a little bit of a sloppy 4-arrow consolidation, but it is still a 4-arrow consolidation. You would really have to be on your toes this morning, though, because of how quickly the bars are unfolding. Here, another first micro macro cross. Here, another first micro macro cross, also piggybacking on a 4-arrow consolidation. So, shoot, your day could be done. Oh, of course. Mike's asking, can you explain a first micro macro cross? Sure. While we're waiting things to settle down here a little bit, let me go over the Hawk signals for you. The first micro macro cross, very strong signal for the Hawk scalper. This thin line is the micro line. The big line is called the macro line. When these lines cross, we look for the first signal where everything is in sync. So that occurs right here. So we've got green trend lines, we've got green bars, we have a green filter, and obviously a green signal. So right here, first micro macro cross. Here we have the opposite to the short side. I don't know, was that still green or gray? No, I think it was, it just tripped over as the signal formed. So this could also be a first micro macro cross right there. Here is another one. Here is another one. So when those trend lines cross, you look for the first signal where everything is in sync. And that is your first micro macro cross signal. This one here would have been tough to get because, here, let's take a look at it as though it were unfolding real time. Pardon me. So we're getting the warning dot, and the signal does print just as everything comes into sync. But typically, with these really quick changeovers, it's sometimes difficult to catch that first micro macro cross signal. Usually it's a little bit easier to see when you're already a few bars in, because then you can anticipate it, right? Everything's turned green. Okay, where's my first signal? Everything's turned red. All right, where's my first signal? And you can see this one did give you a little bit of heat, but did trickle down and find its profit target. Or if you were running an auto break even, you would have got tagged around break even. But it's a really, really strong signal for the hawk. In fact, you know, if you're just looking for one signal to trade, it is a signal you could probably make a living on. Another very strong signal for the hawk is the 4-arrow consolidation. It's sometimes a little bit more difficult to spot. It will typically take the shape of a bull flag or bear flag, although occasionally it will move sideways. You'll get the sideways consolidation. The 4-arrow consolidation you do not want to see is, okay, so 1, 2, okay, this one of these signals didn't trip, but this is essentially a 4-arrow consolidation as well. But in an uptrending market, like I say, typically you'll see it form this way. Sometimes you'll see it form this way. You're not too keen to see it have an upward slope like that. That tends to not be as reliable. But if you get the bear flag, or pardon me, the bull flag type forming, or you get even a sideways consolidation, both those are fine. And you're looking for 4 signals. And typically the market will start to move off that 4th signal. So you have your first micro macro cross, you have your 4-arrow consolidation, and then you have this one right here. This is your macro pullback. And it's easy to spot because, well, first off, it's a pullback. Secondly, everything stays in sync except the micro line. The micro line changes color. Everything else stays in sync. So you don't want to see a yellow bar sneak in. But the micro line goes out of sync, and that is your cue that you have a macro pullback. Also, a pretty reliable signal for the hawk. And then the last signal for the hawk are these right here. You got your red bar buys in an uptrend, and in a downtrend, you will have a green bar sell, if I can find one. It's the opposite anyway. And it shows you really the last ditch effort of the buyers to rally the market. It will be a red bar, but it will have a buy signal. Typically, these develop near the end of a trend, not to be confused with the red bar buy on the eagle, and in hindsight, I should have given them different names. The eagle red bar buy is a very strong signal. The red bar buy in the hawk, not so much, although both these did have decent follow through to them. Like I say, they typically develop near the end of a trend, and you can actually use it as a counter trend setup. So let's say we were looking at this, and quite honestly, I would have probably considered the market to be moving a little bit sideways at this point. And given that this is the second red bar buy signal, I would have probably set up to short it, anticipating that the highs were going to hold and that the market would probably try to move back down here, if in fact we are still in a sideways trading range. This one obviously went higher. The red bar buy signal also varies with the market. What I mean by that is if this were the mid cap, that's the EMD, red bar buy signals tend to be very strong. Whereas in the NASDAQ or the mini Dow, they're more of an early warning the trend may be getting ready to reverse. See, here's a red bar buy, and it came at the end of the trend. It got up, found its profit objective, but then it came back with a first micro macro cross to sell, and now we got this little bit of a move lower going on. But that first micro macro cross signal, definitely one to keep in mind. All right, back into the hard edges. Oh, well, thanks for asking, Mike. You know, there's quite a few people in the room, and I know most of you guys are, and girls, are lurkers, which is fine. But you know, if you have a question, if you're wondering, why is it like that? You should ask. I promise I won't pick on you. All right, well, we're into the hard edge. I'm looking for some sort of reaction. The hawk, the falcon, already full-on bear markets. The eagle barely holding on to its bullishness, and the raptors starting to give us an early, possible early trend change or cloud crossover signal right here. So the cloud's not fully crossed, but we got the pullback. And a quick little move lower. Now the clouds are fully crossed, so the next signal that prints will be a proper #1 signal. But here we go with a little bit of bullishness coming back. Here's that green bar sell that I was mentioning to you before. Now you can take it with trend, or if you think the market is going to reverse, you can set it up as a failure, and you can look to buy a breakout higher. Mark picking up the puns here for Scott. And Mark says lurker describes me to a T. Yeah, except as a lurker you post. Mark says lurkers and snipers have similar tendencies. Yes, you don't. That's true. You want to pick your moment. Wow. Okay. So I'm going to go ahead here and call it a bear market right now. You can see we've come down to the primary resistance line, getting a little bit of a bounce back. We'll see if we get a number 3 signal out of this, or could also just tee up for a move below the low, although we're starting to get a little bit far from that. Maybe I was a little bit too quick with that. Look at the buyers coming back now. Back to the hard edge. Here now the retest. There now the number 3 signal. And that did have enough follow through to it. I guess I should have taken it anyway. I was thinking too late that I did have enough room here to do something with the trade before we got back to the lows. We keep waffling though. Get a bit of a move up, only followed by a move down, and then vice versa. All right, here's now one of our discretionary signals. Well, we got some follow-up signals here. If you were just looking for an excuse to get in, you know, we had a trend line touch back here on the Falcon. We're getting other discretionary signals here across the board. Right here, another trend line touch on the Falcon. See if they give me a second push. No, they're not. Wow, it's almost like you just got to punch in with an order. Okay, several trend line touch signals here on the Falcon. All right, we're actually drifting a little bit here. And are we going to get a late filter entry signal? No, the trend line's spoiled. Thought we might have seen a late filter entry signal develop there on the Falcon. Buyers making a very strong rally. Going to try to come back here, I would say. There now, the number 3 signal. Coming back with yet another buy. All right. You know, to me, it's starting to look like it's OCO time. So let me throw a buy order in above there. I'll throw a sell order in below here. It's almost like a 2-3-2 where we have a buy signal, we have a sell signal, we have a buy signal. So we're waffling a little bit here. I would be more inclined to sell, but very often those are the times the market makes a surprise move higher. Oh, look at that. Okay, well, I better get my exit order in play. Oh, well, that was fast. A quick little bounce back took me out at break even. Well, a little slippage there, which was unfortunate. Oh, way to go, Mark. Mark says no late filter entries, but he did get the Eagle bounce back for 18 ticks. And that would have been one of those cloud trades that we were looking at the other day. So when your cloud starts to get very broad, as it is now, or was, you can be looking for a little bit of a pullback. And here we are back toward the low du jour. that does open up the possibility of another move higher. Okay, here we go again. So let's try this one more time. We'll do a little buy. We'll do a little sell. We'll get stops ready. Okay, there's a couple of number 3 signals that are printing here. Well, one number 3 signal, but a couple of follow-up signals. What makes this signal different from the one back here that I considered, this one, is this one has a lot more room down here to do something with your trade before you encounter the swing low. Compare that to what we're looking at here. This number 3 signal has less room, even though it looks as though there was an opportunity to do something with your trade at this point. All right, they're thinking about it. There we go. Ooh, they're thinking about it. We should see a little bit more follow through here on the short side. There we go. Now that we broke the lows of the morning, we're putting in new lows. And maybe they'll let me have this swing. Come on. If I were smart, I would have taken my profit target. Come on, one more swing. There we go. All right, let's get the stops in a little bit tighter. Hey, don't be talking like that, Mark. Mark says it should bounce here. Yes, Mark makes a very good observation here. You got to give your trade some room to move. Too many traders, because they're afraid of losing money, strangle their trades. They place their stops far too tight. They never give the trade a chance. And that will kill you as a trader. Nobody likes losing trades, but you have to, like I say, you have to give the trade a chance to work out. Okay, well, that's not bad. Bad start to the day. In fact, if I was looking for My trade quota, my day could be done. Well done, Mark. Mark hitting his quota on the day. Antonio is asking, Eric, what is that indicator with the dots above and below the candles? All right. So first off, I'm gonna assume you're talking about these dots. These are your warning dots. These are part of, obviously, your Raptor. There's one of three things you may be referring to, so let me go through them. So your warning dots, part of your signal generation. When about half the signal parameters are met, you will get a warning dot alerting you to the possibility of a signal. The other thing you might be referring to is this little red envelope or green envelope that forms around the last candle. That's actually part of the Geiger counter. And what it does is it gives you the short-term bias rather than having to look at the Geiger counter all the time. Kind of gives you the immediate short-term bias of the order flow. And you can see sometimes it can conflict. Because the Geiger counter actually runs several algorithms to identify the order flow and try to interpret what's going on. The last thing you might be referring to here is the logi counter. It's essentially a tool to help you forecast where the top and bottoms of the bars will be. Oh, the white dots. What white dots? Am I missing something? Are you referring to the signal prompts here? Are those turning up as dots on yours? If these, I realize that sometimes the screen sharing software isn't ideal. The indicator you had on it. Little white dots. Antonio, you're going to have to send me a screenshot. And I'll show you, you can do a screenshot just like this. You right click on your chart and you go down here to image and you can email it to me directly or you can save it first. Make some notes on it if you like. Honestly, I'm not quite sure what other dots there are. What am I missing? This dotted line here, this is part of the initial balance lines. This is what we call a system add-on. Oh, okay, Antonio says you no longer have them on your chart, white dots. The only thing that's white on here are the signal prompts. And I don't know. I don't know. No, it's fine. Don't worry about it, Antonio. It's a valid question. If there's something that's confusing you, definitely point it out. All right, but we're going to assume that it wasn't anything significant. All right, let's put that away there. Paul's asking, Eric, how reluctant are you to take signals at either the highs or lows of the day? Not very. I know some traders avoid the highs and lows. Ray Burke always used to avoid the highs and lows, and he would avoid the Globex open. I'm not that particular about it, especially if I feel the market has a trend. So if I deem the market to be in a downtrend, swing highs are much more important than swing lows, right? Because if the market is going to continue in a downtrend, the swing highs all have to hold. The swing lows, however, all have to yield. So right now, I'm looking for evidence that the trend can no longer continue lower, and then I'll change my bias. So here is a rather significant swing high. If we break above here, then I can usually anticipate two moves in the direction of the breakout. So that would be move one, and then I would be on the alert for move number two. But given that the market is in a downtrend, you could conceivably just throw an order below the lows and wait for the market to fill you. Oops, I was a little bit late there. You could just throw an order in below the lows and say, okay, the market's in a downtrend, and I'll just look to continue with the downtrend. Or the market's in a downtrend, I will just look to short any sell signal, even if the conditions are not ideal. So what I mean by that is, let's take a look here, for instance, at the Raptor. We don't really have any signals going on here, right? The market's kind of sideways. We're getting a mixed bag, but look, here was a sell signal. Here was a sell signal. This was actually a signal prompt, but you could have sold any of these sell signals just because of the trend. But generally speaking, this is something that I learned the hard way years ago. If the market seems to have a trend, you stay with the trend until it hurts, and then you stay with the trend some more because trend seems to trump all. Now, if you're looking at this as a bit of a sideways range, which I would not disagree with you. Okay, so we've had the breakout. We would look for the retest. We didn't get it. We didn't get evidence the market was going to head lower. So now there's a very good chance the market will try to head higher. And knowing that, we can now be on the alert for buy signals, right? So we didn't get one. Well, we got one here in the Eagle. Would have been a little bit tricky to get, but we can look at buy signals now on our other tools. So we got the buy signal here on the Falcon. We've got buy signal here on the Raptor. This one came a little bit early. Now we're going to get the number 1 signal producing. There it is right there. So we could just punch in with a buy signal there. Bring our stops down to a reasonable level. We're still getting some nasty slippage going on here this morning. Or you could do a second push entry. That would work really well. And bring my break even in a little bit. Oh, got some positive slippage on that one. All right, let's leave it as it is then. Okay. Okay, you could bring your stops in a little bit at this point. Here's swing 1, here's swing 2. So you could roll your stops up a little. And ideally, we're going to see a break here above this little swing high. And that will give me an excuse to bring my stops up even more. Come on, get up there. Okay, good question here from Mike. Okay, Mike says the trade forecaster is focusing on or suggesting that we're in scalp mode today. Why aren't we focusing on the hawk? Okay, well, short answer is you could do that. Here's the long answer. The trade forecaster isn't part of the Eagle. Okay, the trade forecaster is on. It's an add-on tool. I can put it on any of the charts. I just happen to have mine on the Eagle. What the trade forecaster tells you is it tells you the market condition and what the next market condition is likely to be. So essentially, it tells you more how you may want to manage your trades than anything else. When the market is in scalp mode, we're going to have more swings. They're going to be bigger swings. And as a result, you'll probably do better if you go all in, all out, and you run a larger stop. When the market is in trend mode, It doesn't always mean there's going to be a big move. You can see this morning we've been in scalp mode and we saw a very big move. But typically in trend mode, you get fewer, less pronounced pullbacks. And what that means is you can probably get by with a tighter stop loss, and you can probably try to run your profit targets. The swing mode falls somewhere in between. So as we're moving from scalp mode toward trend mode, I would anticipate fewer pullbacks. I would anticipate the pullbacks would not be as wild as they would be in scalp mode. So if I think the conditions are right, I may actually start to extend my profit target and maybe even run tighter stop losses. So the trade forecaster isn't so much a tool that tells you, oh, you should only be looking at your hawk or your falcon or your eagle, but rather it tries to give you an indication how you may best manage your positions. Now, having said that, I do know people who will look at it and they'll say, okay, we're in scalp mode, and they will only focus on the hawk. And they will only take short profit targets. But as a rule, like I said, it tells you more about how best to manage your trade rather than which tool you should be focusing on. It's a good question, though. I know sometimes it leads to some confusion. People have asked me that before. Okay, so the buying attempt not working out. Now we're back here within this trading range again, challenging the bottom end one more time. So the buyers tried to gain control. They lost control. The sellers ran it back down here. So here's going to come another sell signal. There it is. Oop, I'm going to just have to punch into that. Oh, wait a second here. I'm not supposed to have 8 contracts. That's wrong. So let's change that to manual mode. There we go. Let's short that. And I didn't even get a chance to adjust my stop on that one. All right, hold on, Aaron, get a grip. Okay, so it's seeming more and more evident that the market is just stuck sideways. So if you think the market's moving sideways, which I do believe it is, got to wait for the breakout, got to wait for the retest, and proof that the retest is going to stick. Otherwise, the market is very likely to go the other way. Okay, so we're off that bottom end of the trading range now. Actually fairly neutral. We're here in the hard edge. The hawk is all full of yellow bars. The falcon is kind of doing a late filter entry to the short side. And we do have a second push opportunity on this one. So the late filter entry, the trend line not changing color, the filter out of sync, back into sync. So everything is red. We produce the signal to short. This one, again, with a bit of a second push opportunity. Wow, the slippage is just nuts here this morning. All right, I'm going to have to move to a stop limit, although that did work out very nicely for us. Stop limit, there we go. Just to try to reduce some of the slippage that's going on. Ooh, nice follow through on that one. The band's starting to get a little bit broad again though. Look, we're going to be up here to 50 ticks just about. Let's see now if we get that little bit of a pushback. A little bit of a retrace. No, not yet. Here we go, 54, 55 ticks. All right, let's take a look. I'm going to attempt to buy the first bullish bar, which is going to be right there. And they didn't slip me this time, and I'll be a little bit more conservative like Mark and just see if we can't sneak a few ticks out of this one. Let's get the break even up there around the ATR line. Paul's asking, the trade manager you're using is different than mine. Do you have the current version? You'll find that at the members area, Paul. It's primarily, it's been a cosmetic upgrade, and it's, we deleted some of the duplicate buttons like the buy, ask, sell, bid, that kind of stuff. But yeah, just go to the members area and find the trade manager, and you'll be able to download the most current version. But like I say, as far as the way the system works, the trade manager works, it's identical. It was just got a facelift. Okay, I don't think I got my profit target on that. I think I actually got tagged at break even, which is okay. You know, it's a counter trend move. I hate pressing my luck with a counter trend trade. Oh, and here they go, giving a little bit of a larger pullback now. The other Paul says, is there any way to identify different Pauls? Well, I can start using your guys' last names if you want. Yeah, I know. Mark says the eagle pullback here worked better on the second push. It did too. The cloud just got a little bit fatter and then followed through. I wasn't giving it a whole lot of room. I was pretty quick with my stop. Some of this volatility and slippage here today is scaring me. I'm not really happy about all the bad fills. Well, not bad fills, but it's unusual for the NASDAQ to be slipping so much. Okay, here we go with another retest of the lows. A little bit of a sloppy four arrow consolidation, but a four arrow consolidation all the same here in the hawk. And there's a little bit of a follow-up signal if you want to try to get on board there. No, okay, let's close that up. All right, are we going to get a 2-3-2 reversal? Have we found our support for the day? Hey, way to go, Mark. Mark says that he got that eagle trade. He was doing it in sim, but he got the eagle trade. Like I've said before, if you can do it in sim, you can do it for real as well. All right. So once again, the market actually opening to a OCO type possibility. We could look to buy above here. We could look to short below here. All right, no, that's not right. Let's do this right here. We're well below 7,000, but we're kind of creeping up on yesterday's lows. If we take a look here at the daily, we're kind of sneaking up there. Oh, don't you dare. Oh, they dared. Not convinced I was on the wrong side of that position, just that my timing was wrong. I do think the market is poised to head lower today. And we're back into the hard edge now. Hard edge on the eagle. The hawk, the falcon, both a little bit more bullish. So you can see trend mode not lasting very long, all of 4 or 5 minutes. We're going to be moving back into scalp mode. So essentially, we've never really left scalp mode. possible rule of three here in the eagle if we come back with another buy signal. Although here now the with trend signal, which is usually preferable. Okay, so things getting maybe a little bit more fluid here. You can see Trade Forecaster says we're in trend mode, but only again for about 4 or 5 minutes, which doesn't really count. But what's interesting is we're going into swing mode. So we're not moving back into scalp mode, which would be bad. Scalp mode being very choppy. But swing mode is making me wonder whether or not I can take it down to the next support zone. Okay, so that's going to be 69.39 half. 69.39 half. Oh, here, let's not be too greedy. I'll consider anything around or below 69.50 to be a win. Okay, there we go. I tend with the eagle not to give it quite as much room as some of the other tools, primarily because of the brick size. And it looks like I got tagged on that quick little reverse, but that's okay. That's still good for a win. Oh, and now we're getting a little bit more traction on that. Nice little macro pullback here in the hawk. Good little trend line touch on the falcon. And now we're closing in on that 69.50 zone. I was looking down here, remember around 69.39 half, I was considering just the bull side of 69.45. Come on, you can do it. Get down there to 69.50. A little bit of a flinch as we try to get down to the 69.50 zone. And another very, very sideways little consolidation here in the hawk. What's interesting is 1, 2, 3, 4. Here was our 4 arrow consolidation. There is no such thing as a 6 or 7 or 8 arrow consolidation. So if it spends too much time going sideways, you should assume the worst. If it doesn't rally, if it doesn't move after that 4th arrow, then something's not quite right. And you can see, look at that follow through now. Yeah, almost, Mark. Mark says that move back down around 6,900. He says the guy could have just shorted that when you mentioned it and held on for the ride down. That was a pretty decent move. I'm a little ticked that I got stopped a little bit early, but oh well, that's trading. That rally up, though, really strengthens the buyers. Okay, into the hard edge. We're getting a green bar sell here on the eagle. I don't know. Is that going to stick, or is the market going to try to move higher again from here? If this has been a tight little trading range right here, here now is our breakout. Looking for a retest. Okay, here now comes the retest. By the way, if it does continue higher from here, we should produce a number one signal to buy. And there it is right there. I'll pull my stops below the bottom end of the trading range, because if this fails, this is where they're going to head to next. Hooray! So, goes to show you it's worth being patient, not chasing the trades around, letting it break out, letting it retest, letting it show you that it can stay out. Funny how that happens when you do it correctly. Well, we've had no shortage of opportunities here this morning, that's for sure. A pretty interesting day overall. Okay, back to the hard edge now. Do the buyers have it? Or are the sellers going to come back now? Here the Hawk already bearish. The Falcon with a late filter entry signal to short. Let's see if I can hurry that up. Oh, come on now. Play nice. Oh, got some bullishness coming back. Okay, at this point, I would bring my stops in somewhat. Shoot. That's rare. That's rare that you see, don't see that late filter entry signal workout. But I guess it just kind of goes to the choppy nature of the market here this morning. All right, gang. We got a few minutes left here in the room before we pack it up for the week. Hey, way to go, Paul number 2. Paul W says he sold the break on the mini Dow 12 ticks at 25,416 and closed at 25,300. Nicely done. Good job. All right. Are they going to give us another little bit of a rally here? It does look that way. The buyer's not giving it up just yet. All right, last trade. And where's my next target? Hey, let's go for 7,000 because that was such a big number yesterday. We spent a lot of time chasing 7,000 around. Are they going to make that little push up? Nope, not yet. There we go. Oh, a quick little hiccup bringing me in and taking me out. All right, gang. I think we're going to call it a day here. Enjoy your weekend. Clock's obviously going back this weekend, so I will see you on Monday. Hopefully a little better rested. All right, we'll talk to you soon. Bye for now.